Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, May 2nd. Firstly to the S&P 500, and here we see a confirmed change of trend today, a candle making a higher high and a higher low. The previous day's trading, if you recall, we were watching the support around the Kijun-sen indicator. It was going to be a significant area of potential support, and that's what we've seen today, the buyers coming in off this level. Also, the formation of something of a hammer type pattern required confirmation of the change of trend. There was good odds for a change of trend, and we have seen that change of trend confirmed. The buyers have been quite solid in the market today. A decent sized white body candle, and it suggests that there's been some solid nets momentum to the upside. But also the buyers have found some solid commitment by closing up towards the high, and they've closed with control. Also, they've been able to just close outside of the top of this highlighted yellow zone, and suggesting that with the bullish breakout above there, there is a good opportunity here for the market to continue trading higher. But we'd like to see some strong follow through for the next day with the buyers continuing with control. Now the buyers did, however, find resistance at the Tenkan-sen indicator today, and were unable to close beyond there. So that is going to be an important benchmark for tomorrow's trading, whether the buyers are able to close above the Tenkan-sen. If we look here previously, we had been trading above the Tenkan-sen for quite some time, except for this period. We then saw the market having trouble breaking up to the upside through the Tenkan-sen, and now also a good test here as to what the relative strength of the buyers is in the market, whereas it was weak here previously. If we do see the sellers come into the market off this Tenkan-sen resistance, and then the market close in a bearish manner down below the Kijun-sen, it will suggest that there has been perhaps a potentially strong change of sentiment in the fast-term time frame. Now, even if we do see the sellers come into the market, potentially strong support around this 2040 level, a previous important level, and the bottom of this highlighted zone. In terms of Ichimoku, we do still have a bullish market in the longer term time frame, supported by the Chica span, and just bullish once again by trading above the Kijun-sen, and neutral at the moment by trading around the Tenkan-sen. And just looking at our bands, and this is suggesting a rather neutral market. We are trading around the middle band, and importantly, there was potential for the market to transition into a downtrending phase. That is still on the cards. Normally, we see after the very strong upside price activity trading outside of the upper band, the market then trading within the bands, finding resistance at the upper band, selling off to find support down around the lower band, and generally we'll find on any rally resistance around the middle of the bands or at the top of the bands. So the area around the top of the bands, 2095, is going to be very important if this trend does continue to the upside. If we see sellers come into the market around there and trade the market back down to the lower band, then it will suggest that we are neutral, and we may be transitioning into a downtrending phase. The downtrending phase is confirmed by the bearish breakout and then the strong bearish follow through to the downside. So no chance of that happening yet, but we could be transitioning. And I do say could be because there aren't any guarantees, but what we see is we tend to see this pattern usually develop time and time again, but it does, or it can take some time for it to develop before we have this downtrending activity. And what we're seeing here is this sideways activity, and what we're also seeing is the lack of strength of the buyers that we saw here previously. Now, just looking at the monthly chart of the S&P for the month that has finished, and that's that second last candle on the chart there, and we see formation of a very small bodied candle testing around that important 2100 level. This 2100 level has been a very important area, tested on multiple occasions in April last year, then in November last year we were testing there, and we had formation of a doji candle and the market selling off, and now the formation of a very small bodied candle suggests that there has been solid price rejection from the 2100 level. The buyers have failed to continue with the control that they built for the previous month's trading, and this suggests good potential for a change of trend. If we do see this change of trend looking to around number 2000 for support, the Kijun-sen and the Tenkan-sen around the top of this highlighted zone, roughly about the 1968 level, and then support down at the bottom of this highlighted zone, down around the 1800 level, roughly. This is an area that is a very important area, but also on the monthly charts, the Kijun-sen is very, very important. And we will be watching for a bearish close down below that Kijun-sen, and it could suggest that we may have the beginnings of a strong bear market if the market can breach down through that Kijun-sen with some strong follow-through. Now just looking to the bands here on the monthly chart, and we see the bands squeezing up, and this is suggesting lack of volatility in the market. We have the market going sideways to a degree, some retracement from the previous strong uptrend, and suggesting that the market is getting ready for that next move in volatility. It moves in a cyclical manner, and we are waiting for a trend to develop now in either direction. Importantly, the market is potentially transitioning into a downtrending phase. We had the market trading above the upper band, selling off to find support down at the lower band, and then rallying to find resistance at the upper band, selling off to close down through the lower band, but not in a strong bearish manner. Lack of follow through failed to confirm the transition into a downtrending phase. The market now rallying for this month to find resistance again at the upper band. Potentially the next move could be to the downside. If we do break out below the lower band, we need to see strong follow through, but also we will need full confirmation for the market to breach down through these lows down around the 1800, that 1812 region. Now, importantly for this month also, we do have to watch the upper band, because there still is a good possibility that the market may not transition into that downtrending phase. And that upper band is at 2099, so close to that 2100 round number, which is crucial for this market. If we are going to see further development of the trend in this medium-term time frame to the upside, then we will need to see a bullish breakout up above that upper band and some strong follow-through above 2134.